Everyone, welcome to my YouTube channel. This morning I want to do a breakdown on how you can trade the 159 CRT, and I also want to explain the logic and my thought process behind this setup. Now, like we all know, the 159 CRT is a time-based model, and that is what makes it an effective model to trade, and it is one of the easiest CRT that you can trade. You can decide to focus on just this alone as your own concept and you'll be good to go. The reason because, or the logic behind it, is because number one is a time-based model where the 1 a.m. will stand as your candle range and the 5 a.m. will stand as your sweep, and the 9 a.m. will start as your distribution. The 1 a.m. will stand as your accumulation, the 5 a.m. will stand as your manipulation, and the 9 a.m. will stand as your distribution. The 5 a.m. is London reversal. So whenever you see a London reversal, that is a sign and a signal that New York is going to distribute. So when 5 a.m. sweep the 1 a.m. and close inside, we then understand that okay, on New York market we're going to be expecting in distribution. The New York market is going to be a distribution phase. However, in this video I will explain how you can trade the candle 2 and the candle 3 at the same time. That means how you can enter on the manipulation phase and how you can also enter on the distribution phase. So you can decide to focus on the manipulation phase to get your entry, and you can also decide to focus on your manipulation phase to get your entry. Whichever you want to focus on, you can trade either of them. Now, before we go further, I want you to understand that every setup that works, every strategy that works, there is a logic and a thought process behind it, and these are the mechanical rules that you must follow so that you will have a high probability setup. We all know CRT formations have their respective higher time frame and lower time frame, and we know that CRT have their respective entry condition that we must follow. We have the model 1 entry, we have the OTE entry, we have the keys of death entry, right? So any of these entry, you can focus on this. Pick one entry model and stick to it. Pick one CRT pattern and stick to it. If you want to focus on candle 3, you can focus on just candle 3. If you want to focus on candle 2, you focus on candle 2. However, in this video I will explain how you can take your entry on candle 2 and how you can take your entry on candle 3. For me, I trade the candle 2. That is where I get my entry, right? So let's go into the video and let me show you how this trade was framed. This is the 159. The 1 a.m. is our candle range. We stand as our London section, and the 5 a.m. stand as our manipulation, which is London reversal. Then the 9 a.m. is our distribution, which is our New York continuation. So what are the things you want to look for when you are trading the 159? The first thing is that you want to pick a time-based CRT. That means you want to mark your 1 a.m. CRT candle. That is the first thing. You want to look for your 1 a.m. CRT candle, the 1 a.m. as your CRT candle. Once you mark your 1 a.m. as your CRT candle, then you want to find a valid key level that is close to that key, to that CRT that you pick. Now, this is the criteria that you must follow when you are picking your CRT candle. The candle should not touch the key level that you want to use. It should be closer to the key level, because if you choose a CRT that has already touched or tapped into your key level, yes, it is valid, but it is not an high probability candle. So always choose. This is how I pick my own candle. Number one, it has to be 1 a.m. Number two, that 1 a.m. candle need to be close to a key level. As you can see, this is my CRT low and this is my key level. I use this V shape as my key level, right? You see, I use this V shape as my key level. You see, this V shape is still very fresh. It has not been mitigated yet, right? And you see my 1 a.m. candle is close to the V shape, which is my key level. So at this point, all I will be looking for is for the 5 a.m. to come, stab into my CRT low, stab into my key level. For my key level, I start looking for my model 1 entry, and I will take the trade. That is the entry on the candle 2. I will show you on the lower time frame. Then if you say, okay, you want to trade the candle 3 alone, which is also good distribution, which is the easiest to trade, all you need to do is to wait for this candle 2 to close inside your CRT. Once it closes inside your CRT like this, you have your formation, your candle 3 formation already. All you will do now is to go to the lower time frame and start looking for your entry, right? So I want to go through it again. Number 1, pick your 1 a.m. CRT, which is your time base CRT. Then number 2, you want to find a key level that is closer to that 1 a.m. The 1 a.m. candle should not tap into that key level yet. That key level should not be mitigated yet by that CRT, but it should be close to the key level like this. Then you want to mark your CRT high and your CRT low. Now, the other logic behind this is this. We understand that the candle range low and the candle range high are liquidities resting above and below. So once price come to take out the liquidity below the CRT low, tap into this key level as the support to push price up, we know that the next target will be the CRT, which will be the next draw on liquidity. So it becomes easier to target the high as your CRT. However, you can also have another target which you could use key level roadblocks as your target, but the best place to always target is your CRT high, because that is the draw on liquidity, right? So let me show you the example on the lower time frame, the entry example. So on the higher time frame, this is 4-hour time frame. On the higher time frame, all you're looking for is your 1 a.m. CRT. You mark out your 1 a.m. and 1 a.m. high and 1 a.m. low, your 1 a.m. CRT candle. Then you find a key level that is closer to that CRT candle that you pick, and that CRT candle that you pick should not mitigate the key level yet. It should be closer to the key level. Then you wait for your 5 a.m. Once your 5 a.m. candle starts printing, you wait for it to stab into the key level and you look for your entry for the candle 2. For the candle 3, you wait for the candle 2 to close, then you go to lower time frame and look for your entry. Now, the lower time frame that is aligned to 4-hour on CRT is 15 minutes. For the daily is 1 hour. For the 4-hour is 15 minutes. So this setup is on the 4-hour. So we are going to the 15 minutes to look for our entry. So let's go to the 15 minutes where I will explain the both entry. Now, as you can see, this is the candle that stabbed into our CRT and our key level. Now look at the candle that I mark as my model 1, the black candle that have M-1. That is the candle I use as my model 1. What happened? You see that price engulf it. Immediately price engulf it, you can take your entry from that point. Once your model 1 get engulfed, you can take your entry from that point. Why did I pick that candle as the model 1? Why did I not pick this rejection candle that tap into my key level? Is because the candle did not give a good body in the candle. It's just a tap of a wick. So the reason I didn't choose it is because price might likely come back to repurge that area again. That's why I did use it. So I use this candle that stabbed into the CRT as my model 1 because it has a good body closure. That could also signify total body soup, as we know, total body soup. And the model 1, you see our candle engulf it. Immediately price engulf it, you can take your entry from there and target your eye, the candle CRT eye, as your target, right? That is if you want to enter on the candle 2. But if you want to enter on the candle 3, this is the criteria you should follow. Number 1, you want to wait for a change in state of delivery. The red line there is where our change in state of delivery happened. As you can see, price went up and closed above that series of down candle, which give us our change in state of delivery. Now, what do we want to do at this point? We want to wait for price to pull back. We want to use open, hold, low, and close in this case. So when the next 4-hour candle open, which will be our distribution candle, we want to wait for that candle to pull back into a key level. Now you see this yellow line I mark, this open close that I mark here, that serve as our key level that price went into before distributing to the upside. Why did I choose this open close? We can see that little bearish candle, which is standing as our one candle liquidity inside the box. So that is what make me to choose this open close, because this open close is the key level that is closer to this one candle liquidity that is inside this box. So what happened is price close above, give us change in state of delivery, then it give us that one candle liquidity inside the box. Then price came back to tap into this OCL key level. Immediately price close above this OCL key level, I wait for the market to close above that candle that stands as our liquidity, which is another break. I wait for another break. Immediately price break above, I take my entry from there. That is to trade the candle 3. You take your entry from there. So the criteria is you wait for a change in state of delivery, you wait for market to pull back, and you want that pullback to give you a liquidity, and you want to look for the key level that is close to that liquidity. Once price pull back and tap the key level, which is our yellow line, the red line is our change in state of delivery, the blue line is our entry where on the candle 3, where the price engulf and break above the black candle that is there, give us second break, we enter there, we target our CRT. It's as simple as that. Let me show you the bearish example. You can see we have A-shaped key level, right? We have our CRT candle, our 1 a.m. and our 5 a.m. stabbing to the CRT and also stabbing to our key level. If you are looking for Model 1 entry, you look for your Model 1 entry from the key level. If you are going to trade candle 3, you wait for the candle 2 to close inside your candle 3 like this. So this is our CRT low and this is the CRT high and our key level. Notice that the CRT did not tap into the key level yet, but close to the key level. So what do we want to do again? We want to go to the lower time frame, which is 15 minutes, to look for our entry. Now this thick blue green candle here is our Model 1. This is the candle, the first candle that stabbed into our CRT high, and that is also what stabbed into the key level. Now I choose this candle here as Model 1 because the way the body is thick, I want it to be engulfed, right? And price came, it engulfed it, right? And we use that one as our Model 1. You see it engulf it and start selling. The black line M1 M-1 stand as our Model 1. So as immediately price engulf it, you take your entry from there if you are trading the Model 1 entry. But if you are trading the Model if you are trading the candle 3, you want to wait for candle closure, a change in state of delivery. A change in state of delivery happened after this. I forgot to mark it. This series of black candle that lead to the where after this candle that gave us our Model 1, you see that there is a break, the black line there. This is a picture chart. I would have marked it for you to see the V shape that price broke there. Immediately price break it. What happened? Price went back. It creates this equal high liquidity inside the box. Look at it. The two black candle that is inside that box, and it also gives this one candle formation liquidity, right? Then price mitigates that FVG and it starts selling. Now where do you want to take your entry again? You want to wait for your second break. always remember this: wait for your second break before you take your candle 3 entry. The second break happen immediately price start to the FVG. It give us our second break. Once price give us our second break, we want to take that entry. So this is how you frame your work. It is very easy, and you can apply this to your daily CRT as well. It is very, very easy. I hope you find this helpful. If you have any question, you can either answer the comment section, or you join my Telegram channel where you can get access to me and ask your question. You can also join my Telegram channel where I share my trade setup and I explain my thought process behind every of my trade. And you can like my YouTube video, subscribe and follow this channel. God bless you. I will see you in our next video. Have a great day.